Hi everyone, and welcome to this morning's webinar. Thank you for your patience. I've just making sure that David had actually started the recording. I'll just look over to his screen. Yep, I hope you can see my screen. I know he can see my screen, so I'm going to take from that that you can see it as well. But before we start, as usual, may I just draw your attention to the disclaimer on the screen. I know you've seen it many times before, but it really does bear mentioning once again. This can be a very risky business. Please don't ever think of using money that you cannot afford to lose. Right. If this is your first time with us, welcome. I see in the webinar we have some of our quantum users, and I see also we've got some of our forex program students as well. So welcome to you as well. With regard to this session, what David and I try and do is introduce the concepts of volume price analysis and how they can be applied to the markets, and not just the stock market, futures, commodities, bonds, but also to the forex market. And if this is if volume price analysis is a methodology that perhaps you've not come across before, it's basically the relationship, the very close relationship, the price action and volume play in the markets, and how volume price analysis really allows you to look at what is going on in the market from the inside out. Now, in the spot forex market, which is what we're looking at today, clearly there is no central exchange. So the volume that we are looking at is the activity, the tick volume that is represented, that is delivered to you by your broker. It is drawn from the interbank market, and the quality of it will pretty much depend on the broker that you are using. It is not 100%, but it is good enough for us to be able to use this particular methodology. Now, in the webinar, what we do, we look at the this is the technical analysis, if you like, element of the charts. But in the program, we also the forex program that David and I put together. Technical analysis is only one element of your trading. Then we have to look at the fundamental, you have to look at the relational, you have to look at the psychology, and also the actual, what we call the mechanics of trading. You know, where would you be looking perhaps for entries, exits, stop placement, etc., etc. If you like, we draw on elements that are covered in the program, and I'll bring up a link to that program at the end of this session. But just to show you where we actually are, this is us here. Quickly, where we are. There we are. This is us. We're actually broadcasting from down here in Hampshire. This is the setup we have with you, and it's actually where we put the program together. And this gives you all the background, but to the program in very great detail. It's a very comprehensive program. It is pretty much, very much a self-directed. You can learn at your own pace. There is a lot of content. David and I make no apologies for the content that we've put into this program, because despite what you may read or what you may think, this is, you know, all you're being asked to do when you're trading is just judge whether something is going up or down. You're making a binary decision. Is it going up or is it going down? And it seems very straightforward and very simple, but it is not. There is a world of complexity in this market. It's not complicated, it is merely complex. And unless you understand that complexity, and unless you understand also the cross-market analysis that you have to you have to do, and you at least be aware of, that is where a lot of traders struggle. And by cross-market, I mean what is happening in the stock market, what is happening in the bond market, in commodities. Everything, all these markets are interrelated. And just even if you're on a 5-minute chart, a very fast chart, and you're just looking to take a trading opportunity, you have to be aware of what the currency pair that you are looking to take a trade in, what is going to be moving that pair. And in that pair, to break it down even further, you can see here, I've got a workspace here where I've actually got 3 major pairs. I've got the pound, the euro dollar, and the Aussie dollar, and underneath I've got their equivalent yen pairs. when you look at euro dollar, is the movement in the euro dollar, is it being caused by the euro, or is it being driven by the US dollar? And having that information in background, even if you're only on a 5-minute chart, is going to be key to whether you are ultimately successful in this particular endeavor. I'm just going to pass over to David and then come back to me. I've got the MT4 and I've also got the MT5 platform, because one of the questions we get asked is, as traders, we have a choice of, broadly speaking, we've got 28 pairs that we can choose from. And sometimes when you start, you don't know which one to focus on. Do you focus on one? Do you focus on two? Or do you just try and take an opportunity in one of the 28? And we've got some suggestions where you can perhaps take the load off the maybe your computers, and I'll explain how we use what we call our bucket system. But I'll just pass over to David, and then if you wouldn't mind coming back to me for a couple of minutes, and then go move over to you, because you've got the Ninja Trader up this morning, haven't you? Yep. Okay, thank you.
Thanks, darling, and a very warm welcome to you all, wherever you are in the world. It's very early morning here. It's pretty foggy and damp, so it's not terribly pleasant. So I hope it's nicer where you are in the world. If this is your first time, we're more than happy to answer questions. If you have a short question, then we'll answer it in the chat box. If it's a longer question, we will be happy to answer it on air for you. As Anna said, we run both platforms here. Anna's got MT4, MT5, and I've got the Ninja Trader. And if you're not familiar with MT5, if you're more familiar with MT4, it really isn't a great leap to move to the MT5 platform. The look and feel is very, very similar, but what it opens up are two primary differences. First of all, the fact that you can use a much greater array of time frames. As you can see there down on Anna's screen, that's on MT5. You've got time frames there that you just don't have access to on MT4. You've got 6 minute, 4 minute, 3 minute, etc. In addition to that, it also opens up the markets, because not only, of course, you have spot forex, but in addition to that, you have all the indices, commodities, and a relatively large number of stocks as well. So it really is a multi-asset platform. And of course, the principles of what we teach in the Forex program, much of that is about trading. It's about volume price analysis, which of course can be lifted directly from one market to another. So if you're trading spot Forex and you want to apply the principles in the program to trading indices, you can. And the indicators, of course, work in exactly the same way as well. I'm going to pass back to Anna. We'll flip-flop between the two platforms. As I say, if you've got any questions, please just drop them in the chat box and we'll be happy to answer them there for you.
As I said earlier, there are a lot of factors that you have to consider when you are looking to take a trade, and it really doesn't matter whether it's on a faster chart or a slower chart. And I've mentioned obviously the fundamental news. I've had a quick look at the calendar, and the most important event today is a piece of news for the British pound. But when I said earlier, there's an awful lot of stuff that you have to be aware of, and clearly, what is going on in the wider world is not just the fundamental news that is going to impact the currency and currency pairs. Is you have Brexit, you have Italy, you have the tariffs, and to that list, if that weren't enough, what I would also suggest that you put on the horizon is to keep a watch and a listen out for what Donald Trump is saying about the Federal Reserve. He wasn't happy, as he tweeted out last week, about the Fed's intention to keep to this interest rate path of slowly increasing interest rates to more normal rates, as it were. He's not a happy bunny, and the markets responded accordingly. We had last Wednesday's meltdown. We covered that in detail in yesterday evening's webinar when we purely look at the American market and we look at indices and stocks. So if you want to know a little bit more of a background, that is recorded and is up on my YouTube channel and at Quantum Trading. Now, each one of those, you will have heard obviously about Brexit, and if you trade anything with the British pound, then you really have to keep a very close eye on what is going on there. Sometimes the pair will do, especially with cable, will do the exact opposite of what the headline is actually screaming, as it were. And you'll often find with the headline that by the time the headline comes in, the market has moved on, either because the insiders have inside information, or traders just simply take the wrong position. With regard to Italy, what's interesting about Italy, yesterday there was they were supposed to have set their budget. It didn't. It's been postponed. And the pair to watch with Italy, obviously the currency is going to be the euro. It's actually the euro Swiss, because what the Italians tend to do, in fact all Europeans do, but the Italians more than most, because we share a close border with Switzerland, is they hop over to Ticino and they take all their money into Switzerland. And what that happens is it has a huge impact on the Swiss franc. The Swiss franc is one of a safe haven currency. It also tends to has a relationship also with gold. So as I said, there's cross-market analysis. There's an awful lot you have to keep on your radar, even if you are a short-term trader. So keep an eye on Italy. I think there are going to be some figures released to give the level of currency flows out of Italy. Most of them go into Switzerland. They just go over into Ticino and park their money there. Obviously, then we have tariffs, what's going on with Donald and China. Then you have risk on, risk off sentiment. That is going to be reflected in currencies and currency pairs. So we have to keep an eye on the yen. And as I said, and now we have to add what Donald and the spat, and there is going to be a spat, and it's going to be quite a significant spat between the president and the Federal Reserve. So again, just keep it on the horizon and watch the US dollar. Now, what I've done here is basically, as I said earlier, it's sometimes very difficult to know which, pairs, should I do 1, 2, 3, or 4? What we always suggest with new traders is, by all means, start with one, but really don't just focus on the one. Maybe make up a little workspace like this. This is you could make up your own pairs, as it were, but at least have 1 or 2 of the majors, maybe a yen, and possibly a cross pair. I haven't got a cross pair on this. I'll have another workspace ready next time. As I said, this is my MT4 platform, and then over MT5, and then over on one of my MT4 platforms, this is the same account. This is my Think Forex account. I have actually multiple versions of my MT4 platform, because your computer, this is an awful lot of data that you're pushing through your system, particularly if you have our indicators or you have any indicators, you're going to be using a lot of power. So what you can do is you can download multiple versions and create what we call buckets or silos, if you like, and then you can have maybe your indicators on one, you can have your trend indicators on another, you can have different pairs, and it allows you to have a look at across the 28 pairs without having to just have everything on the one account. And if you want details of how you can set that up, here what we've done is, there we are, where is it here? There we are. There's actually a link. If you go over to quantumtrading.com, there are videos how to install multiple instances of MT4, the MetaTrader 4 platform. And I think there's also, it's the same process whether you have MT4 or MT5. And it just helps the load on your computer. I know I've spent a little bit of time going on a bit of background. I've done it because it's for the purposes of the recording, and it means I don't have to repeat it on every occasion. Right, actually, what's been happening in the market? I know David's been keeping a close eye. This is MT4. I've got my multiple CSIs, and we can see here, well, on the 5, the 15, on the hour, we can see some buying of the British pound. That's the yellow line. We've got buying of the euro, and clearly, what's it being bought against? Well, we can see the red line, which is the US dollar, certainly in these time frames. That's what I've been looking at. It actually matches my my little workspace here, what I call my multiple workspace here. And what you do is I have this multiple workspace, and then I have individual workspaces for the currencies. I look at it and I think, yeah, is the British pound? Yes, it's been bought against the US dollar. And then I'll go to my individual one for cable, which is I call cable Renko here, because I have a Renko chart when I actually want to see where there's the possibility of taking a trade. But I think David has been looking at something else. I'm going to keep an eye on cable. I tend to at this time of the morning. Is there anything you've got, David? Do you want to move? Can I move over to you now? Yep. Okay. See what David has got on the NinjaTrader platform, and I can see here. Yep, there's a nice move that's been developing, certainly off the volume point of control on the 12-minute chart. What I don't like is this volatility candle that has suddenly popped in, which means that the move may now actually stall. And in fact, I've got, let's have a look, 6-minute. What's wrong chart there? There we are, 3-minute chart. In fact, I've got 2 volatility candles, and we've actually stopped now on this resistance at 31.63. But we'll see. The Renko here, this was a potential entry point here. It was blue, but it is generally, we've got this congestion period. Where is it likely to go? Well, 31.65 is up here. 31.63 actually corresponds with what we see on the 3-minute chart, and in fact, it looks like we've got a bit of a reversal coming up here. A ton of volume under that, under this candle here. We've got weakness coming in, but weakness was likely to come in because we've got these 2 volatility candles triggered. What happens with volatility candles? There's momentum coming into the market, but you also know that momentum is going to run out of steam. Sometimes it runs out of steam on the first, but you can be sure that at some point it will run out of steam, and it looks like it's run out of steam on the second. So I'm going to keep an eye on that, and I'll pass over to David.
Thanks, darling. You should be seeing my screen coming up any minute now. There we go. I'm looking over Anna's shoulder, and there it is. While I just move the chat box out of the way because it's always irritating. There we go. Just while Anna was talking there, what I've been doing is I've just been looking at, just been keeping an eye on the euro, and in particular the Aussie, because on the CSI, as you can see here, this is the 10-minute CSI, and the blue line, the Aussie, has been selling off pretty strongly. And as always, what the CSI highlights, it really is your window on the world. It's the starting point, because it breaks the market down into the base components of the forex market, the individual currencies themselves. So when you're trading in forex using the currency strength indicator, what you're doing is you are basically, it's a process of disassembling and then reassembling. It's almost like a kit, if you will. You have the model, you break it down into its component parts, and then you put it all back together again. And it's pretty much that process over and over again throughout the time horizons. And what we're seeing right now, as I say, we're seeing pretty strong selling in the Aussie, which is the blue line. We've got decent buying of the euro. This is the orange line. And to be honest, really spoiled for choice, because you've got a lot of pound buying, the yellow line continuing. This is on 10-minute time frame, but as Anna showed you there on the MT4, MT5 platform, you would have multiple time frames. Multiple time frames is an essential component, whatever you're trading, and it also applies to the indicators as well, because what you'll see on all the indicators is that if there is a move starting to happen, and if that move then ripples through the time horizons, you will see strong trends develop, you will see strong reversals occur as well. So it's the analogy I always use is the pebble in the pond. You throw a pebble in the pond and the ripples move away from where that lands in the pond, and it's exactly the same here. If you've got a change in trend, for example, where we're reaching to an overbought and oversold position, the pound is now getting very overstretched on 10 minutes. Equally, the Aussie is getting very oversold on 10 minutes. So we're heavily into overbought and oversold regions here. At some point, there will be a reversal, because this market is about mean reversion. These currencies constantly move from strong to weak and back again, from overbought to oversold and back again. And what you're doing with the CSI, you are seeing that visually presented for you very simply. and it tells you instantly what's going on. It tells you the strength of buying, the strength of selling by the steepness of the lines. It tells you which pairs to go and analyze and look for opportunities, because if you've got divergence, very strong divergence as we have here between the euro, which is rising very strongly, and the Aussie, which is falling very strongly, you are going to see a strong trend on that particular time horizon for that particular currency pair. The corollary to that is if you are seeing two currencies moving in lockstep together, as here, for example, the dollar, the red line, we've seen pretty strong move in the dollar this morning, has now come off, starting to sell, and that is running parallel with the Canadian dollar here. They're pretty much running together. Then that is not likely to offer a strong trend because there is no divergence between the two currencies themselves. So if they're moving up together or down together, then there isn't going to be a particular trend. The strength of one currency move may be enough to actually develop a minor trend, but it's not going to be anything like as strong as the one we're seeing on the Euro Aussie right now. And finally, of course, when you get the currencies moving into these regions where they're sort of flip-flopping around, then you know that that currency is congestion and it's not going anywhere because it hasn't got any momentum to it. So it really does reveal, it's the starting point, it's the radar on the market, it's the place to start, and it gives you a heads up of where to go and look for the best opportunities. You may be spoiled for choice, but ultimately it is a question of selecting that currency pair, and then drilling down into it to find out what else is going on. We just go back to, this is the Euro Aussie, so what we're seeing now is we've seen this strong trend develop, which has been developing for the last, half an hour or so. It's still continuing. We've got good volume here. We've got the trend monitor, which is helping to support. We've got the volume point of control, which is sat down here. We're moving through these relatively low regions of volume here, so there's very little in the way of volume to prevent the pair moving higher. And it is all about anticipation, because what the volume point of control does, and it's exactly the same on the MT4, MT5 platform as it is on NinjaTrader, it's about anticipation, because what you are wanting to anticipate all the time is, from a volume perspective, is the market likely to pause at these regions where we have high volume? We expect congestion to start because there's a weight of volume sitting at that price point, which is likely to cause the market to pause at the very least. It may not cause it to reverse, but it will certainly cause it to pause, because like support and resistance based on price, which is what these levels are about, and that's the same as the support and resistance indicator, again on MT4, MT5, these are based on price. So where the market has tested these, bounced off, tested again, etc., then the thicker the line, the denser the area of support and resistance. On the volume profile on the right-hand side here, this is basically taking volume and introducing the concept of time. In other words, the longer the market sits in these regions, the greater will be the concentration of volume. And the heaviest concentration of volume is where the volume point of control sits. And as the market moves away from there, where you've had price agreement, if you like, then you start to move up the histogram. And as you approach these low volume regions, you expect the market to move through pretty quickly. And where you've got more dense regions, you expect the market to pause. Just going to switch off for a moment. Excuse me, I just had to clear my throat. So it is all about anticipation, and as always you would have this on multiple time frames, because what the multiple time frames will tell you is what is ahead in a slower time frame, and therefore what is likely to cause the market to pause if we're trading off a faster time frame. Now what we're seeing here at the moment is, this is the nice thing with Ninja is it's very easy to highlight where markets have opened. Not so easy on MT4, MT5 for various reasons, not least because the time stamp comes off the server or the brokerage. But here you've got, this is 7 o'clock, this is where the European market opened. And we're now coming through to 7:45, so at 8 o'clock we'll see London open. And of course, when you're looking at volume, this is the volume of Far Eastern Asia, which actually compares quite nicely with the European session. But in terms of comparative volume, what we want to be comparing now is really from this point here and looking at the volume profile in this region, because we want to be comparing like with like. So we want to make sure that whenever we go through session periods, we are actually comparing apples with apples and not apples with oranges. So we're seeing some decent volume here, taking this market higher. Interesting to see how that we've got a bit of a decline here in volume, which is not a great sign for a continuation. Nevertheless, it's not enough to cause us to stress too much. The trend monitor's blue. We've got the trend line rising here, which is part of the trend monitor. So that's picking up nicely as well. Let's just head back to the CSI, which I've got on 10-minute. When a currency approaches one of these regions, it doesn't necessarily automatically mean that it's going to reverse off an overbought, oversold region. It just means it is in an overbought or oversold state. And what we're seeing right now in the Aussie is very much that condition. It's very heavily overbought. The euro, though, is still climbing and still got some way to go until we get into an overbought condition. If we head to the currency array, excuse me a moment. If we head over to the currency array, what I've isolated out here is I've actually isolated out the Aussie. And that's why you're not seeing all 28 pairs, because one of the things you want to see is you want to try and understand, first of all, what is driving your particular pair. Is it euro strength? Is it Aussie weakness? And secondly, you want to see whether the sentiment towards the pairs you're considering is actually universal. And what we're seeing here is pretty much that for the Aussie, where we've got very strong selling against the dollar, strong selling against the CAD. These look as though they are starting to join. It's two brothers and sisters down here. And equally at the top, we've got very strong buying. If you remember from the CSI, we had very strong buying on the pound. The yellow line was rising strongly, and that was counterbalanced with the Aussie, which was selling very strongly at the same rate. So it's no surprise to see the pound Aussie, which is the strongest of all of them currently in terms of pound buying and also of Aussie selling. The euro Aussie here is at spot 5. If this move is going to continue, we want to see it climb up to the top level here. And what the array does, it really gives you all that information instantly. It's telling you this, the inclination of this line is telling you the strength of trend right now. This is on 5 minutes, so we've got a pretty strong trend on euro Aussie. We've got a very strong trend on pound Aussie, and you can see the others are lined down here. This is the Aussie dollar. We've got the Aussie CAD. You probably can't see it, but it is actually there slightly underneath. And we've got the Aussie yen, the Aussie Swiss, and the Aussie New Zealand. So that gives us an instant snapshot. And on the right hand side here in this column, what this is also giving us a heads up to is the point at which perhaps these currency pairs, because we're now dealing with pairs, whereas the currency strength indicator deals with the individual currency, what these indicators do, the currency array and the currency matrix and the currency heat map, we move to consider the currency pair itself. And what you're seeing here is you're seeing overbought and oversold conditions flagged up as they arise on the various timeframes. You can see here, when we go to the bright colors, that is a state at overbought and oversold. And when it's in brackets, it's just giving us a heads up that potentially this is reaching an overbought or oversold condition. If we move to the currency heat map, the currency heat map takes a slower perspective on what is going on across our 28 pairs. So if you were looking at this from a slower time frame perspective, in other words, from perhaps an intraday over an hourly, 4 hourly, and perhaps you were looking at this for a daily perspective, that is what the currency heat map is all about, because it's looking at the relationship between bearish and bullish sentiment, but weighted across the time frames. Because if you think about it logically, a bullish sentiment, as we have here on the 1 minute time frame for the Aussie dollar, for example, should not carry as much weight as an hourly or a 4 hour or a daily or a weekly or a monthly. So what we've done on the heat map is we've actually weighted this ranking of where we are at the moment on the 28 pairs. And that is why they move at a slower pace. So what you see on the heat map is, first of all, the ripple of bullish or bearish sentiment across the various time frames. But secondly, you also get a perspective on a slower time horizon of which currency pairs are very strongly overbought, which ones are very strongly oversold, and again, which ones are moving up and down the ranking ladder. So if you're looking at this, for example, from a daily perspective, maybe you're looking at a slower time frame, maybe you can't sit in front of a screen all day long, but you want to get involved in the market and actually trade the slower time frames. This is a great place to start, because you'd be looking at perhaps the extremes, for example, and you might be trading for, off extremes and looking for those reversals to pick up a trend in the opposite direction. Pound Aussie, pretty much bright green universally, a little bit of bearish sentiment on the 4-hour time frame, but very, very strong across the time horizons. Same for the Pound New Zealand. Equally at the other end of the spectrum, very bearish for the Aussie dollar, very bearish for the New Zealand dollar. The Aussie and the New Zealand, you can see here we've got quite a stack of New Zealand, Aussie. These are all Aussie or New Zealand pairs stacked down at the bottom. Now, all things being equal, at some point these will start to rally, because no currency pair stays overbought or oversold forever, and that also applies to the different time frames also. So the heat map is a very different animal. It looks at, it not only gives you a heads up instantly onto bullish and bearish sentiment across the time horizons, so it does away with having a huge number of charts displayed at the same time, but the ranking also gives you a much slower perspective over the sort of 4-hour, hourly, 4-hour, daily time horizon. And when it moves, this is likely to move off a reversal and develop a nice trend over a much slower time frame. Yeah, I'm just going to pass back to Anna at that point to see what's going on the Euro Aussie. Okay, we're still holding up there for the time being. Got a bit of a pivot formed here. Maybe a little bit of a pause coming up. We will see.
Right, I didn't want you to, the disclaimer came up because I hadn't moved my my MT5 over. Right, while David was looking at the Euro Aussie, what's really, really interesting, I'm looking at cable. I just want to move back to my multiples, because I had, I've taken the yen pairs off for the time being. I've just hidden them. And really, looking at the three majors, we see the price action that we were following, and I said with the cable, it had to go through 31.63, which it actually has, and on the 6-minute chart we've got another volatility candle. No volatility on the euro dollar, but what's interesting, because David's been looking at the Aussie and how it's been heavily sold, you would think with the dollar being sold, why the Aussie dollar hasn't actually moved yet. So, and the CSI was picking this up perfectly. I mean, it's just, that's why we developed the indicator. One of the reasons is because we wanted to see the individual currency movements and being able to highlight, if something is being sold very heavily, for example, in this case, the dollar, that strength of selling hasn't yet been certainly not been reflected at all against the Aussie dollar. It may come, it may not come, it may, the dollar may suddenly reverse, but you've got to understand how these flows sometimes rotate in the different pairs, in the majors, and just to give you, as I said, this context and background, because the markets don't move in isolation, the currencies don't move in isolation, and the currency pairs don't certainly move in isolation. They are all affected by, as I said, the factors that, oh, here we are, the 100, that may be the case, I don't know, it may be the case. So just don't laugh. Sorry about that, I apologize. Right, so I just wanted to show you the moves in cable, compare that with what's happening in the euro dollar, but also look at the Aussie as well, because the driver in the Aussie dollar, yes, the dollar has been selling, but boy, oh boy, it's the Aussie has really been you know, been put under the cosh this morning, and we've seen that against the euro, because the euro is being bought. So that kind of, your brain starts to think about these connections. You stop thinking of this market in one dimension. You start to think in 3 dimensions, and you also start to think laterally. You think, okay, but the currency strength indicator will highlight that for you. But I wanted just to have a look at back to cable Renko, because what is happening now as traders, you know, this is a 24-hour market. We've got, as always, we've got London to factor in now in the next few minutes. But what's interesting is it did blast through that level 31, around about 31.63. Here it is on the here we are, 61.63. There was a degree of momentum that pushed that up. Now, what's it's pushed it up to, this is where support and resistance comes in. And you also look over to your left and you see the CSI. You know you're going to hit resistance, because the CSI is very oversold on the overbought, I beg your pardon, on the on the 12-minute chart here. You can see the dollar. The dollar is continuing to fall. And look where the Aussie is now. At some point that is going to reverse. Support and resistance levels, traders don't like to, inverted commas, chase price, because, you know, they like to look at reversals. How you decide your reversal, what criteria you use for your reversal. Do you use an indicator such as CSI, as the CSI? Do you use a Fibonacci level? Do you use what we have here is our Camarilla levels that we've developed? And 31.75 is the R3. So how you play that, if you don't feel comfortable with taking a breakaway trade from something such as the volume point of control and just making the most of that trading opportunity, or perhaps you weren't around when the move started, you then have to look to levels where perhaps you think, well, do you know, if it gets to that level and there's really strong resistance, maybe there's an opportunity for a short. That is a reversal or an opportunity if it comes down here perhaps to an S3 or the S2 or the S4. There are actually 6 levels on this indicator. You would say, okay, is that a good opportunity for a short? And what you then do, this is on the 12-minute chart, but if you go to the hourly chart, which I've got here, and I've talked about this before, we talk about confluence and strength of levels. What's interesting, again, this move here has actually been precipitated from, it's actually a nice little breakaway from 31.51. Now, looking over to the left of the chart, you can see this gap down. This was over the weekend. If you read the press at the weekend, there was all sorts of rumor and speculation coming out about Brexit. It was going to be a done deal. Everything was going swimmingly. You know, people were rushing backwards and forwards from London, between London and Brussels, and in fact the whole thing just, I think, just went pear-shaped, and the pair actually gapped down. I think by the time the market opened, everyone was still positive, wasn't it? Weren't they, David? But it still gapped us. It did the exact opposite of what everyone thought it would be. The gap has subsequently been filled. This is the volume point of control. It's really been moving sort of sideways, but we've had this breakaway. But what's interesting is this level here, the R1, 31.72. This is on the hourly chart. This is the R1. It actually coincides with the 12-minute chart. Let's have a look. There we are here, which actually coincides with what we call the R3. The way we've developed this indicator is the values for the different levels are calculated in they're not just based on the previous day's open high, low and close. On the charts up to the hour, the levels change every time the session rolls over, but on the hourly chart, that level will stay there for the rest of the week. So what it does, it gives you an indication of how strong a particular support and resistance level is likely to be. And the fact that the cable has hit R3 at 31.70, roughly 31.75, 76 on the 12-minute chart, which also coincides with what we call the R1 level on the hourly chart, that also gives you more confidence in saying, you know what, this is really going to be perhaps a reversal that is worthwhile taking. And also we have our standard support and resistance indicator here at 31.76. And it's all also confirmed, as I said, with the CSI. So you bring all these factors together, the technical picture that you see on the charts with the multiple time frames, and the actual entry point here is with your Renko. So that's even put a pivot up at 31.73. They're never going to correspond exactly, but they're going to be in the general ballpark. Now, as usual, we have London. We'll see whether that reversal actually happens. If we didn't have London coming up, I'd say, yeah, that would be a valid, a valid place to take a reversal. If you didn't want to put a market order in, put a limit order at that level. A lot of traders do, and I suspect if you put a fib level on there, I suspect it will probably correspond with a significant fib level. As somebody has said on Forex Live, it's the 100 MA. So let's lean against it and sell. Hey, I'm not, each trader has to put together a set of tactics that work for them, and how you develop those tactics will pretty much be determined by what type of trader you want to be. Do you want to be a completely discretionary trader that you take every decision and you just analyze what you see on the chart and take the decision accordingly, or do you want to be a complete systematic trader? And there are systematic traders in the sense that when a price hits a level, be it an average, a Fibonacci, they will take the trade. You cannot be a discretionary systematic trader. You can have a system and be in a discretionary method, and if you want us to give a 30-second elevator pitch about how we trade with VPA and our indicators, it is a methodology, but it is a discretionary methodology, because what you see on the charts, you make the ultimate decision about whether to take that a trade or not. You don't just say it's hit a certain level, ergo I will take that trade. Some traders do, because they don't like, in a way, then they can blame the system, isn't it, David? That's really what it is all about. David's nodding his head. And one final factor on the 12-minute chart to see whether to confirm that this is a significant pause point in this move higher, and it is a move higher. We had a volatility trigger here. Price went back into the spread of the candle. Then it had a further shove up. We've had another volatility candle, and as I said earlier, this time it has actually put the brakes on this particular move, but the brakes are probably on as well because we've got London coming up.
Oh, indeed. I've always got something to add. No, that's fine. You can stay there for a moment. And if you've never traded through a crossover session, and in particular Europe to London and London to US, it's almost as though you could break this particular market up into segments of 4 or 5 hours as we move through these major blocks. It is remarkable how often the sentiment in the London session reverses what's gone on in Europe, and it is also remarkable how often the US session completely turns on its head what has gone on in the London session. That's what happens. It really just reinforces the fact that this market is driven from the inside out. If you believe that, fantastic. That is what the methodology is based upon in terms of volume price analysis. It is basically based upon the insiders and what they are doing in terms of the price action and the associated volume, whether that's in spot forex, in proxy volume, whether it's in futures, in an exchange futures volume, whether it's in stocks, in cash markets. It's all the same principle of volume price analysis and understanding the relationship between volume and price, and from thereafter being able to interpret and follow what the insiders are actually doing at that particular time. And what we're seeing right now, as Anna said, we've got the volatility triggered. We're seeing the market retrace, which is what we expect. We've also got half an eye to London, and we are not going to be surprised if we see the market reverse. The pound is very heavily overbought. The Aussie is very heavily oversold. I'm just looking across at the 12-minute there. You've got very strong buying of the Swiss franc for lots of different reasons, not least of all probably triggered, as Anna said, through the dear Italians, bless them. moving into a safe haven for them and away from the Italian banking regime, which is not the strongest in the world, I'm sure you know. And it's all there for you. And then you overlay that with all the other aspects. I'm just looking across the charts. You've got volatility on 6. So we've reversed back inside there. We've got volatility on 12. And this is the other reason. And the other aspect of this, which is just a really nice workspace, it really does demonstrate, and we do this on NinjaTrader as well in the US session, blending together both time and non-time based charts is just a great way to help you trade with more confidence, because price-based charts, time-based charts can be a little bit spiky. If you bring in the Renko, something like a Renko, or use a tick chart, what it reveals, particularly the Renko, because it is much more structured in the way it appears on the chart. The indicators work in exactly the same way. So whether you're looking at the trend dots, for example, which work brilliantly with the Renko, or the trend monitor, or the support and resistance, or the pivots, whatever it may be, they all work in exactly the same way. But what the Renko chart does, it just smooths things out a little bit. Now you can use it either as a mechanism to help you stay in, or you can use it as a mechanism to help you get in, or you can use it as a mechanism to help you get out. It's just a different way of looking at price action. And of course, with the Renko indicator we developed both for MT4, MT5, and also for NinjaTrader, you have two options. You can either pre-select the brick size to the one that you want. In other words, you say, well, I want to trade a 2 pip or 3 pip or 4 pip, whatever it may be. Or alternatively, you allow the indicator to deliver the optimal setting for that particular currency pair at that particular time of day in that session. And of course, that changes all the time. It's all very well trading a Renko and you say, well, I'm going to use a 2 pip per setting for this. Well, is that 2 pip universal throughout the day? Well, if you've chosen it, it is. But actually what goes on behind the scenes is the market is constantly speeding up and slowing down. So why would you not want to trade at the speed the pair is moving at rather than some arbitrary value that you've ascribed? And that's the difference with the Renko. You have these options. So you're trading with the market. You have the optimal settings. Yep. We're just seeing that reverse back inside the spread of the candle on 12 and on 6. And I'm also seeing over on the Ninja, on the Euro Aussie, we're starting to see a little bit of a pause point come up as well. Just flick over here. Yeah, it's just moving. We've got some decent selling volume coming in now. So we're starting to see a potential reversal pretty much across, certainly in terms of the focus on the European currencies of the euro and the pound. Just going to pass back to Anna.
And just to comment a bit more on the on this is the 3-minute chart, and we've got the, as I said, this point where it paused at the roughly at 31.77 in the 31.70 region. We actually got that's actually a nice 2-bar reversal on there as well. And what I've done here, if you double the time frames, I've got 3, 6, and 12. It's rather nice because it really does help with your candle analysis and understanding. And obviously we had the volatility triggered on the 6. You've got the next candle within the spread. That is also weakness because that creates a wick to the top of the candle. And we've got that here on the 12-minute. You've got the down candle there. That would be the wick there. Now we haven't got a 24-minute candle, but we've got a 20-minute. Let's have a look what 20 looks like. And here we are. This is the wick. That's what we're looking at. So it's a great way to sort of learn candles and an easy way to be able to overlay them by sort of doubling the time frames all the time. So when you see something like this on a 2-bar reversal is easy to spot. When you look at a 12-minute, you've got the candle there, you've got that one there. You know that's a big wick on a slower time frames, and that's what we're doing all the time. We are reacting, you know, we are trading that reaction in a faster time frame, being aware of what's going on a slower time frame, and you know, looking for the reaction in the faster time frame. And what I also say is, yeah, we'll be looking at entries, but had you been in the trade, say, from the breakaway from here, breakaway trading gets a really bad press because traders, you know, they say, oh, it's chasing price, there's fake outs, but actually, if you know what you're looking at, and it's supported with volume, and the candle's supported, and everything else is supportive, and you've got an indicator such as the CSI, there is really, it can be really, really successful, because once you get a good a breakaway, that's when you can get a good trend, a micro trend, a mini trend. It will move, and it will move at a pace, as I said, with volume. But what it also tells you with the support and resistance, we've been looking at looking at the reversal, but if you've been in that one and you saw this come up and you looked at the hour and you saw a strong resistance and you saw the CSI on a reversal and you're in there, well, just get out. That's it. You know, this is your time. If this is your time horizon, you know, why sit around? Or if you've got perhaps two micro lots on, you think, do you know what, I'll take my profit on one. Maybe I want to take maybe I'll let it run, because you've seen something in an even slower time frame. You say, yeah, this is just a minor reaction. You know, the British pound is still looking strong, maybe in the 3 hour or the 2 hour or what have you. You know, how you play the information that's delivered to you on the chart, with the candles, the proprietary indicators, is pretty much down to you. But at least with VPA and the indicators, you are going to have a pretty good idea of what is going to happen next. And it looks like actually that reversal is carrying through into the London session, which is actually quite unusual, darling, isn't it? I mean, sometimes it goes the other way, and it's quite steady as well. But and the pound Aussie coming off as well, I expect. David was looking at. Were you looking at the pound Aussie or the euro Aussie?
I've got the euro.
Euro Aussie. Yeah, is that going to come off as well? Probably. You've got the Aussie oversold, Annie. Right. Okay. Brilliant. Oh gosh, we've gone slightly over time. Thank you so much for coming along. It's as I said, we have to wrap up now very, very quickly. Past my disclaimer. There we are. The indicators are from countertrading.com. You can buy them individually, or you can buy them as a bundle, or the complete package. If you buy the complete package, there are lots of advantages to that, because what we do is when we develop new indicators, they are added to your package for free. And in fact, on the MT45 and Ninja, we're looking at developing an index for the British pound. So if you've got the package, that will be added to your package, and the support 24/7, 365 days of the year, and you can actually transfer from platform to platform, from Ninja to MT4. There is a slight difference. The Ninja Trader is slightly more expensive. The full package is 894, that's for MT4 and 5, or 1197 for Ninja Trader, but there is an EPP option, and if you don't like the indicators or they're not for you, you do have a 7-day money back guarantee. But if you want more information on them, just drop myself an email, or david@quantumtrading.com. As I said, this is we have put together a forex program. They include the full suite of tools, and the cost of that is 139.1 for MT45 and 1694 for Ninja Trader 7 on 8, and the difference in price is because there are slightly more indicators in Ninja Trader than MT4, but that does, as I said, include the full suite of indicators. It's about over 50 hours of video and video podcast. There are downloads, very much self-directed. You learn at your own pace, and if you want more information, you can find it at quantumtradingeducation.com, or you can drop me an email, anna@annacooling.com, helpdesk@quantumtrading.com, or david@quantumtrading.com. We're both of us on email, and we'd be more than happy to hear from you and answer all of your questions. That's it. Any other question, David? Have I missed anything? That's brilliant. Thank you so much. As I said, thanks for coming along. I hope you've enjoyed it, and good trading. As I said, do keep in mind what I've said right at the beginning. Keep an eye on the Euro Swiss, keep an eye on Italy, tariffs, and Trump, and the Fed. We're back next week. Enjoy the rest of the trading week. I'll be posting on my website and also at my forex trading page on Facebook, so you can catch up with me there. But whatever you're doing this week, have a great week, and we'll see you next time.